Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Court Cunningham, co-founder and CEO of Orchard, and we're going to discuss why the housing market is not setting up to crash, but instead normalizing. Court, it's great to have you at MarketSite. I'm excited. This is one of my favorite topics to cover. Before we get into the housing market, tell us about Orchard and where you fit in the housing ecosystem.
Yeah, Orchard is the most stress-free, fair, and simple way to buy a home. We turn people into cash buyers. We guarantee the sale of their old home, and we do it all on a modern digital platform. So you can kind of think of us as e-commerce for homes, and making the process just really simple and stress-free for consumers.
So what do you take out of the process? Having just bought a home last year, the amount of paperwork and time and staying on top of the lender, the title agent, the attorneys, it was a full-time job.
So that's part of what we do. We are everything in one. So we're a real estate broker, a mortgage company, and a title company all in one on one digital platform. So the paperwork is there because of regulation, but we've digitized it, and all the handoffs and what happens next is automated and digital. So the process is easier, but then also if you have an existing home and you need to buy a new home, lining up those two things is really hard.
Right.
And we get rid of that timing problem by effectively guaranteeing the purchase of your new home and the sale of your old home so that you can make the timing work in whatever way works for your life.
And let's talk about the housing market where it sits right now, because that's part of the issue. You have people who are nervous to sell because they're not sure they'll have something that they'll be able to buy or afford because of interest rates and housing prices moving higher. So what's happening in the housing market right now?
I mean, we are exiting probably the tightest time in the housing market in the last 50 years. 6.2 million homes sold last year, which was a record high in the history of the company, driven by record low interest rates. 6 months ago, you could get a mortgage for 2.5%. It's now 5.5%. So the cost to own a home has gone up, which is making people kind of rethink is now the time to move. So our view is volume is going to come down, and it is. Right now, it looks like this year is pacing to about 5 million homes trading rather than the 6.2 from last year. So volume is down, but there's still 5 million homes trading hands. And if you go back to pre-COVID, that number was like 4.8 million. So our view is it might get a little below 4.8, but we're effectively going to go back to a more balanced market.
Have mortgage rates impacted buyers?
100%. So it is 20 to 30% more expensive to own a home today than it was at the beginning of the year. Partly because of home prices, but the majority is because of interest rates. It's 5.5% to get a 30-year mortgage today. And so what's interesting, some people are saying, hey, if I'm a discretionary buyer, I'm not going to move right now. That's fine.
Right.
Or I've got a 2.5% rate locked in from a year ago. But most buyers are must-move buyers. I'm having a child. I've got a new job, whatever it is. And so those people are still buying. They're just changing their budget. Like, I thought I could afford a $500,000 house. I'm going to look for a $400,000 house. Well,
I mean, it's all relative, but isn't 5.5% still historically low? And if you think rates might go lower, you could buy the house and refinance?
That is, if I was advising a friend, that's exactly what I would do. And a lot of the press likes to make dramatic statements about rates have doubled. But if you just widen the screen out to go back like 10 or 15 years, 5 to 7% is kind of normal. So we're basically back to a normal range, which is our view is like this isn't a crisis, this isn't a crash, it's just a return to normal. And but if you're 30 years old, you've lived in a 10-year bubble, and so you don't know that actually this is normal.
Right. Or that stock markets actually do go down.
Yeah, they're also that.
So, I mean, especially over the past 2.5 years, we've just been so conditioned to be flush with liquidity, interest rates so low, market always going up. So again, it's all relative. If you thought you could afford $1,000 a month, now it doesn't matter what the interest rate is. It's just what you thought the affordability was. But to your point, I mean, historically, these rates are pretty good.
That's exactly right. The other interesting thing is there's a generational dynamic. So millennials are the biggest generation ever, bigger than the baby boomers, and 12 million millennials are at prime nesting age, which is kind of 27 to 35. That's a lot of people to be getting married, having kids, looking for a home all at the same time. And so our view is things actually may get tight again in another 18 months as things normalize, because there still is a supply-demand imbalance where builders have not been building as much after the 2008 crash, and you have this surge of demand for millennials. So our view is there's going to be a long-term tailwind for housing.
Yeah, makes sense. So my question to you was, is a housing crash likely? But those dynamics don't make it sound like it is. You still need to house people.
Yeah, I mean, so you've got limited supply,
Right.
You've got this bulge of demand. The other thing, if you go back to 2008, like the financial system is very strong. Like no one's doing ninja loans and all that crazy stuff. So people have record home equity. So we don't think there's any of the conditions from 2008 that are going to drive that kind of outcome today.
So what buyers will most likely be to enter the market? The millennials, of course. Anything that you're seeing, Gen Z trends or perhaps even Gen X, any outliers there?
No, the biggest one are millennials and just the surge of demand. So a lot of first-time buyers. It is interesting though, first-time buyers, and it varies city to city, do have a choice. Like if you own a house, you almost always decide to buy a bigger house or smaller house depending on your situation. But first-time buyer, you can choose to rent, and so depending on the city, rent may make more sense. And what you're seeing is rental prices going through the roof, basically mirroring housing prices. Well, I wanted to buy. Well, I go rent, and that's driving up rental prices.
Well, I also think, too, and this might even seem obvious, but with the pandemic, we don't have to live in New York. We don't have to live in San Francisco, in Chicago. We can work remotely, maybe only have to go to the office once a quarter, and some jobs are even fully remote. If you want a better quality of living and not work to pay your mortgage, and you can go virtually anywhere, you can understand why markets in the Southeast and on the West just exploded because you had opportunity now.
Yeah, I mean the other interesting fact I think is people talk about housing prices are up still like 10% year over year, or whatever, 10, 12 depending on the market. But that's true. But housing prices have peaked in all of our 13 markets that we're in across the country. The price of a house in May was on average was higher than the price of a house today. So prices are coming down in these markets. Again, doesn't mean it's the end of the world, but that's part of the process of balancing supply and demand.
Well, especially some markets where they went up 50, 60%, they have to come in at some point.
That's 100. Like so, the more expensive markets like Seattle are seeing more of that than the more modestly priced markets.
All right, Court. I can go on all day, but we'll leave it there. Thank you so much for
Jill.
joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.